What if I told you that gold just made history quietly, while most people were busy watching stock markets and crypto charts? Imagine waking up, checking the price of gold, and realizing it has surged to levels nobody thought possible just a few years ago. Suddenly, everyone is asking the same question. Why is gold so expensive right now? Is this just inflation doing its thing? Or is something much bigger happening behind the scenes? Welcome back to Silver Forecast. If you care about protecting your money, understanding where the global economy is heading, and staying one step ahead of the crowd, make sure you hit that subscribe button right now and turn on notifications. Because what we're about to discuss today could directly impact your savings, your investments, and your financial future. Let's start with the obvious explanation: inflation. Over the past few years, prices for everything have gone up. Groceries, rent, gas, insurance, you name it. When inflation rises, the purchasing power of your dollar falls. And historically, gold has been seen as a hedge against that. When people lose trust in paper currency, they turn to something tangible, something you can hold, something that has been valuable for thousands of years. Think about this. If you had $1,000 sitting in cash during a period of high inflation, its real value would slowly shrink. But if you had that same $1,000 in gold, chances are it would hold its purchasing power much better over time. That's the traditional argument. And it makes sense. But here's where it gets interesting. Inflation alone doesn't fully explain the speed and scale of the recent surge. Gold isn't just creeping up, it's jumping, breaking psychological barriers, hitting price levels that once seemed extreme. So we have to ask, who is buying all this gold? It's not just small investors. It's not just people like you and me buying a few coins or bars. Central banks around the world have been stacking gold at record levels. Countries that once relied heavily on the US dollar are now diversifying their reserves. Why? Because global trust is shifting. Take, for example, the geopolitical tensions we've seen over the last few years: wars, sanctions, trade conflicts. When one country freezes another country's foreign reserves, it sends a powerful message to the rest of the world. Suddenly, holding assets controlled by another nation doesn't feel so safe anymore. Gold, on the other hand, has no counterparty risk. It doesn't depend on a government promise. Now let me ask you something. If you were a country watching all of this unfold, would you feel comfortable keeping most of your wealth in another nation's currency? Or would you start quietly accumulating gold? This is where the conversation shifts from simple inflation to something deeper: global monetary strategy. Some analysts believe we're witnessing a slow, strategic move away from dollar dominance. Not overnight, not dramatically, but gradually. And when central banks move, they move big. Even a small percentage shift in their reserves can push gold prices significantly higher. But here's the part most people aren't talking about. Retail investors are often the last to notice these shifts. By the time headlines scream about record gold prices, the smart money has already positioned itself. So the real question isn't just why gold is expensive. The real question is, what do they know that the average person doesn't? Let's dig a little deeper into that question, because this is where things start to get uncomfortable. When central banks buy gold, they don't usually go on social media and announce it with excitement. They accumulate quietly, month after month, year after year. And recently, we've seen some of the largest gold purchases by central banks in decades. That's not random, that's strategic. Think about countries like China and Russia. For years, they've been steadily increasing their gold reserves. Not in small amounts, but in massive, consistent chunks. Why would they do that if gold was just another commodity? Why not hold more dollars, more bonds, more foreign currency? Because gold is neutral. It's not tied to any single political system. It can't be printed. It can't be digitally frozen. And in a world where financial systems are increasingly weaponized, neutrality becomes incredibly valuable. Now imagine this scenario. You're a policymaker watching global debt explode. The United States alone carries trillions in national debt. Interest payments are climbing. Governments around the world are spending more than they bring in. If confidence in sovereign debt starts to weaken, investors will look for safety. Historically, safety has often been gold. But here's where some people start whispering about something more controversial: manipulation. You've probably heard it before. Claims that gold prices are suppressed, that major banks influence short-term movements, that paper gold markets don't reflect physical supply and demand. While it's difficult to prove every theory, one thing is clear: the gold market is complex. There are futures contracts, derivatives, ETFs, and physical bullion all interacting at the same time. And sometimes, prices move in ways that don't seem to match the headlines. For example, there have been moments when inflation data came in hot, yet gold barely moved. Other times, gold surged even when inflation appeared to cool. That disconnect makes people suspicious. Is it pure market forces, or are powerful institutions positioning ahead of the public? Now let's bring this back to everyday life. Picture a middle-class family trying to save for retirement. They see their grocery bill rising. They see mortgage rates fluctuating. They hear about bank failures, credit downgrades, and geopolitical tension. At some point, they start thinking, maybe I need something stable, something real. That's how gold demand builds at the retail level. Slowly at first, then suddenly. Remember what happened during previous financial crises. In 2008, after the collapse of major financial institutions, gold didn't just drift upward, it surged in the years that followed. Fear fuels demand. Uncertainty drives capital into safe havens. And right now, uncertainty is everywhere. We have regional conflicts, trade wars, elections that could reshape policy, and technological disruptions changing entire industries. Even digital currencies are challenging traditional systems. In times like this, gold becomes more than a metal. It becomes psychological insurance. But here's the twist. When everyone starts talking about gold at family dinners, when your neighbor who never invested before is suddenly buying coins, that's usually late in the cycle. So where are we right now? Early? Middle? Late? That's the million-dollar question. And if this surge isn't just about inflation, if it's also about shifting global power, de-dollarization, and strategic reserve changes, then we might be witnessing the early stages of something much bigger than just a price spike. Before we wrap this up, I want you to think about one thing. If trust in fiat currencies continues to erode even slightly, how high could gold realistically go? Let's think this through calmly, without hype and without fear. Gold doesn't need the world to collapse to rise. It just needs uncertainty. It just needs doubt. Even a small crack in confidence can redirect trillions of dollars. Global financial markets are massive. If only a tiny percentage of institutional money shifts from bonds or equities into gold, the impact on price can be dramatic. And here's something most people underestimate. Gold is a relatively small market compared to global stocks and bonds. That means it doesn't take a tidal wave of money to move it, just a strong current. Now imagine a world where inflation stays stubborn, not hyperinflation, just persistent. Prices never really come back down. Wages struggle to keep up. Central banks are stuck. If they raise rates too high, they risk recession. If they cut rates too soon, inflation flares up again. That tightrope creates long-term instability. In that kind of environment, gold quietly becomes more attractive. At the same time, global alliances are shifting. Countries are trading more in their own currencies. Bilateral trade agreements are expanding. The conversation about reducing reliance on the US dollar isn't just theoretical anymore. Even small steps toward diversification can increase demand for gold as a reserve asset. But here's the key point. Gold's rise doesn't automatically mean disaster. It can also signal transition. The global financial system has evolved many times before, from the gold standard to fiat currency, from fixed exchange rates to floating ones. Change is uncomfortable, but it's not always catastrophic. The real danger is being unaware. If you ignore these shifts, if you assume everything will simply return to the way it was, you risk being caught off guard. But if you stay informed, if you understand why assets move the way they do, you gain an edge. Think about everyday investors who bought gold years ago when it wasn't trending. They weren't chasing headlines, they were thinking long term. They understood that gold isn't about getting rich overnight, it's about protection, it's about balance. Now I want to ask you something directly. When you look at your own financial situation, do you feel fully protected against inflation, against currency risk, against systemic shocks? Or are you relying entirely on assets tied to the same financial system? This isn't about panic, it's about preparation. Because whether gold is rising due to inflation, global strategy, manipulation, or a combination of all three, one thing is clear. Something is shifting beneath the surface. And shifts like this don't happen often. We could see pullbacks. We could see volatility. Gold never moves in a straight line. But zoom out. Look at the long-term trend. Look at central bank buying. Look at debt levels. Look at geopolitical tensions. When you connect those dots, the recent surge starts to make more sense. So here's what I want you to do. Drop a comment below and tell me what you think. Is this gold rally driven mostly by inflation? Or do you believe there's a deeper global reset unfolding? I read the comments, and your perspective helps shape future videos. And if you found this breakdown helpful, share this video with someone who's worried about the economy but doesn't fully understand what's happening. Sometimes a simple conversation can change the way someone sees their financial future. We're entering a period where awareness is power. Stay curious, stay prepared, and as always, stay one step ahead. I'll see you in the next video.